Hello, 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 hello. What's going on, everybody? Welcome to Al Stock Trades. How's everybody doing today? So I have this company that we've talked about it a lot on the stock terminal, and a lot of folks have been pinging me saying, "Al, this company is exhibiting what you're talking about regarding free cash flow and operating cash flow." And so I've been looking at it for the past couple of days, and I've been doing some due diligence on the matter, and kind of doing a collective, case study. Unfortunately, as I was doing that, today's the stock's up 6.85%. Trying to get this information to you, and then the past 5 days it's up 15%. Obviously, the month it's down. The reason why it's been down is because of the tariff discussions, because this company is in Southeast Asia. But since the bottom, now it's recovered around 34%. So, obviously, my apologies that I haven't been able to get this in time to you. But, for the folks that were looking at it, and for the folks that were, doing the intrinsic value calculation, utilizing our software on lifetime access, congrats, right? But we'll go ahead and get to it now because I'm, unfortunately, busy and building things out. So we're going to go ahead and do a deep dive. Just a kind of a, 90, just a quick 90,000 view on the technicals real quick. The stock was exhibiting a stage 4 analysis where it broke out of the 200-day when the stock price was around $16. And it's been trying to fight the 200-day, and it's been consolidating. And just recently, it broke out of that 200-day on, it started breaking around this year, and I'll explain to you kind of why in 2024. And then the Trump tariffs 2.2 kind of 2.0 went into effect, and the stock was at $3.36, and now it's pretty much almost, pretty much $1 or more. So we're going to go ahead and talk about this and just, do our due diligence on the matter. Let's see here. Let's go. And for the folks here, we're going to go ahead and do another live in regards to what's going on with Clover. I think this is going to be an interesting discussion, and I think you guys are going to like it. So there's pretty much going on right now, pretty much down 1%. So let's go ahead and just read my due diligence, and we'll go from there to see what's going on with the overall analysis. So Southeast Asian powerhouse. So it's pretty much Uber of Southeast Asia, but there's obviously a twist. It's pretty much mirroring Uber's playbook: dominate mobility through supply aggregation and scale. Where Uber leads with mobility, Grab's strength lies in its delivery and financial services, offering a super app model tailored to Southeast Asia. To kind of show you, this is their delivery service. This is also their delivery service here, right? This is from their investor relationships page. This is some numbers we're going to go over. This is their fintech app, right? And you may be looking at it, and again, I have some experience in the market, so this looks to me, this looks pretty familiar, right? It kind of reminds me of this. Doesn't that look like this, right? Jumia. Problem is, Jumia is in Africa, and I just think Africa is just not ready for the market. For some reason, Southeast Asia seems a little bit, it's literally the same look, different area. And, Singapore and Southeast Asia tried to replicate Amazon, and they were successful. They created C Limited, $73 billion. And as you can see, it was as high as $357 stock. And now it's, this is another one that we should analyze. But I do think that there could be something here. Okay. So let's do some analysis. Okay. So It's quietly building, and they have a flywheel model that I've recognized. So supply-led growth is a foundation. More drivers improve route coverage, longer wait times, reduce costs, and attract more riders. Grabs has a diversified fleet: cars, motorcycles, taxis. They got some strong partnerships with Transcab, Bluebird, and are essential to gaining driver scale. This is a foreign company. This is not a United States company, so we'll talk about that. Um, and this is kind of the mobility revenue growth: 446, 638, 869, 1 billion. Margins are impressive. We'll talk about those. There is some regional competition. We have Gojek uh, in Indonesia and some Vietnamese, Vietnam companies. In certain cities, competitors may beat Grab on pricing or speed, but overall, Grab is maintaining its market leadership, and it has sufficient capital in order to execute. There is some short-term profitability risks. We'll go into that. Grab is able to convert food delivery and fintech users into mobility users. It's really weird. It's kind of like what Elon wants to do, a super app, but instead of social media, these people are going after food delivery and fintech. And there's a subscription model, Grab Unlimited, cross-selling across food, groceries, and rideshare. Increased frequency and average spend. There's a multi-service user transact time 2.5 times more often and spend 4 times more. So you can see it's a flywheel effect. And you could go ahead and read these things. Q4, I believe it was 764, 17% growth, as you can see, you've seen from here. 17% growth. That's where we pulled it from. GMV, 5 bill. Monthly transaction users, 44 million. So you got about 44 million users. There's about 650 million people in the Southeast Asian region. So that's about double the United States. So the market's pretty strong. Again, 44 million people are using it, and there's about 650 million people in the area. First ever positive net income, 11 million. We'll go ahead and talk about that. Adjusted EBITDA, 97 in Q4. You got fintech growth, GrabFin, and digital banking. Loan disbursements, about 639 million, 44% year over year. Loan portfolio, about 536 mil. It's at 5.2 times revenue growth. We'll go ahead and do our intrinsic value. Now, just to let you guys know, Grab was a SPAC by Gensler, which is, he's a wonderful investor, I would say. This was a cash burning SPAC, but now I think it's become a fast scaling super app. It's uniquely positioned to benefit in Southeast Asia, especially in the digital economy and the rising middle class. So you got about 650 million people. Profit margins are good. You got delivery, rideshare, and even fintech payments. Here's some issues. So they're ported, I believe, in the Cayman Islands, which is common for Southeast Asian tech firms. Think of, Alibaba, JD, and all these other things. The concerns that we have is there are U.S. tariffs. Malaysia faces 24% U.S. tariff on goods starting in July. Indonesia threat 32%. Regional economic slowdown potentially. The IMF has downgraded Indonesia 2025 growth rates. there's obviously high interest rates, which affects the elevated borrowing costs for wallets. There's a lot of competition. Okay. And of course, regulatory pressures. So I just wanted to just give this is a very quick overview, surface level analysis. Now you know kind of what this is. Has there something been successful in this area? Yes. C Limited, wonderful stock that I invested in. Has there been failures? Yes, Jumia, but I think this is a locations problem. Obviously, Grab is not in Jumia, is not in Africa. Overall, the market is doing really well. The market's up today. And what is Dumb Money doing? Dumb Money is pretty much coming back online. Okay. So we're going to go ahead and do some analysis. So you go ahead and let's pull up Grab here. Okay. And let's run a couple of things. First off, let's look at the average analyst price targets. This is part of our Premium Al Stock Trades terminal. It's like a 30,000 yearly terminal like Bloomberg, but without the Bloomberg price tag, right? And we can do more than Bloomberg. The average price target right now for Grab is around $5.75. So we are climbing up there. Okay. Right. So we're not too far. In fact, you look at the hourly, then we can hit it up with an analyst price target. You can see that we're slowly climbing up. Okay. We could go ahead and, do the daily and whip out the support and resistance lines to see what's going on. We can see that it fell right on our support line here and it pretty much reversed, which is very powerful, right? My favorite is let's look at institutional ownership. Let's see what the big dogs are doing. Okay, so let's do 25 years. So look at the number of 13F shares. So what does that tell you? It's the number of shares that institutions are buying. And you can see that from Q3 of 2024 to Q4 of 2024, you had an increase in pretty much almost 1 billion shares bought for Grab. So institutions have been buying, right? And 3.5 to 3.9 billion shares outstanding seems like a lot. Well, it looks like institutional owners own about 3 billion shares, which is equivalent to 73%. So it is a lot, but you don't have to worry about them because institutional ownership have all bottom up. And you can see that there's been a tremendous increase in buying pressure from institutional owners. In fact, in Q3 of 2024, Grab had 52% ownership. Now it's spiked to 73%. And again, this is, part of our stock terminal where we're able to get access to what the billionaires are seeing. So you can see directly, what they're doing. Again, we have data centers directly on Wall Street absorbing this information. So we are in the inside loop of what Wall Street's looking at. And you could see, a lot of people are buying this, which is interesting. Okay, let's keep going back up here though. So a lot of institutional ownership. I like this because it gives you spikes. So again, something happened in Q4. What the hell happened in Q4? Why am I seeing there's a huge spike between Q3 to Q4 of 2024? So something happened. So in order to answer that question, we got to go ahead and look at the financials. So we'll put up the financials, right? And these, let's see, where are the shares? These are your shares, and you can see there's a lot of shares, as you said. But what happened? In order to understand what happened in Q4, we have to look at the quarterly information. We pull up the quarterly information, and we see something happen that's interesting. Net income turned positive for the first time in Q3 of 2024. And then for a second consecutive quarter, Grab had another $27 million of profitability on a net income basis. That is actually huge. So let's go ahead and look at operating cash flow, and you can see why this is impressive. So you can see that Q2 of 2024, Grab had 2 out of the 3 positive. In Q3 of 2024, they had 3, both the operating cash flow and, of course, free cash flow, because you have to be operating cash flow positive in order to be free cash flow positive. And for the first time, they had net income positive. So something happened in Q2. They finally were free cash flow and operating cash flow, not to take away from Q3 of 2023. But this shows you that the second quarter of them turning positive on a net income basis, you can see here, 26 million. Let me just zoom in so you can see what I'm saying here, guys, right? 26 million and another 27 million, both for Q3 and Q4, right? So you can see this. So obviously, you go ahead and take a look at the share price and go ahead and look at a year out, and you could see that a year ago, it was around, let's go ahead and just zoom out a little bit more. Yeah, so that's pretty good. So a year, it was around $3, right? So again, not too far, right? But it was $3, okay? And then something happened to where institutions realized that, holy shit, that this thing is becoming free cash flow and net income positive, which pretty much generated 81% return. But then the stock started dropping because of the tariffs, because again, they're in Southeast Asia, they deliver things. There's a lot of issues here, okay? And the tariffs and all these things, so, that the stock got hit. And if I may add, the stock got hit hard. It went back to $3.48. However, this dip is now being bought, and now there's a 34% recovery. So who's buying it? Well, obviously, I just showed you Q3 and Q4 were operational cash flow positive, free cash flow positive, and guess what? Net income positive on a GAAP adjusted, on a GAAP basis. Okay. I'm just drinking some coffee. Again, this is a live. I'm not reading off of any script here. The only thing I was reading off of was this thing here, right? All right. So let's go and zoom out a little bit here. So this explains now, I was asking myself why it went from Q3 to Q4. And again, right? So this increased because of what I just told you, net income, free cash flow, right? It always goes back to that, right? Look at the total number of invested. Institutions went from $8 billion invested to $13.9 billion invested, right? So you could see how much money this is, right? They're putting a lot of money in because they're buying more. And who's selling? Retail investors, right? Because, again, retail investors, this thing is down 62%. Retail investors bought at $16. They held the bag, and they consistently, this thing has dropped all the way down to $2.33. They're idiots, right? They were selling. And then who was buying? Institutions were buying, right? And, this is not speculation, because look at the ownership percent, right? They just kept buying. They just kept buying. Then we dipped, and then we increased. And so there it is. So enough with that. New positions are opening up. Again, these are institutional owner. So you might be asking yourself, how do I have access to this information? Every 3 months, if you have over $100 million, you're considered smart money. By law, these institutions have to take this and publicly disclose this information on the SEC website. The problem is the website's disorganized on purpose, to where retail investors, you go ahead and good luck, try it yourself, have to read all these lines of code in order to understand which institutions are buying. And they only give you per institution. What our platform does, it takes in all of that information, all of that data, and even gives it to you in a 25-year format. So let's say for Apple, we would have all this data. It's just this is a new company, right? And it gives it to you in a way that's easily comprehensible and understandable. And that's the power of the platform that we have, okay? So these are new positions of the big dogs, right? And again, if you want to be rich like the big dogs, you need to have access to the data that the big dogs use. So folks that are interested, we do have a SaaS coupon code, $1,200 off lifetime access. Again, we will be increasing prices because this information is expensive, especially what I'm about to show you with the generative AI. Okay, $1,200 off. We keep innovating. One-time payment, lifetime access, coupon code SAAS, SaaS. SAAS, not the other way, right? And it's alstocktrades.com. So we got that. Look at the number of increased positions. These are institutional owners they're not new positions. These are increased positions. That means institutional owners that have already owned Grab. This is them increasing their position. So you had 275 increases right after that second quarter in Q4 of profitability. Okay. Obviously, you got closed positions, people, coming out, but these are people leaving, but you see more people entering than leaving, right? Here's the put call ratio in terms of the amount of puts. You could see that it's at 0.3. Again, one is like indifferent. Up higher than one is bearish. Below one is bullish. This is at 0.3, practically near zero. That means there's more calls than there are puts. And you can see here are the total calls. There are about 10.7 million calls to approximately 3 million puts. So you can see the ratio here. So if you divide 10 million divided by 3, you get, put call. You take 3 divided by 10, you get 0.3, which is what this calculation is here. You see the power of math? See how it makes sense? Because it's puts divided by call ratio. So you put 3 million divided by 10 million, you get 0.3. Okay? Again, this is not rocket science. You just need access to the data. That's all it is. Now let's look up analyst estimates. And let's look at the revenue for what they expect this company to grow. Now, currently on a fiscal year basis, let's go back to annual. And you could see from an annual perspective, in 2023, let's just open up operating cash flow for a sec. In 2023, they had $86 million for the first time. They turned positive in operating cash flow. Let me zoom out. Let me zoom in here. This is our AI summary analysis. It's included with lifetime access. It conglomerates all this 10 years of data or whatever data we have. And it shows you, hey, in 2023, it turned positive for OCF. And then free cash flow 2024 turned positive for the first time. Obviously, we know Q3 and Q4 net income turned positive. I'm speculating potentially, maybe next year or the year after that, they're going to be profitable on a fiscal year basis. And once they have all three, well, take a look what happened at Tesla when that happened. AMD, Enphase, Carvana, Palantir, right? The list goes on and on. Again, guys, same language, same crap, different company. All right, let's continue digging deeper. Again, for folks that have questions and whatnot, this chat's open. It's alive. It'll be converted into a normal video through YouTube's ways. And, you can ask questions, okay? All right, let's continue moving forward. So you can see that they just became 2 out of 3. They got about $2.7 billion of revenue. Again, these numbers are in millions for folks that don't understand. It's okay. This information is hard. They don't teach this in school, which is why we have a platform like this. So about $2.7 billion. And so based off of this trajectory, and again, find me a place that gives you 2029 projections. You're not. Let's see. Let's see if I put my foot in my mouth. Let's look at Yahoo Finance. And let's look at analysis. They only give you to 2026. Again, they want retail investors to fail, right? We give you all the way to 2029. So in 2029, they're expecting, it's kind of funny, the slope changes almost. So I think there's going to be revisions, but They're expecting $5.7 billion in revenue. And I think they might even go higher, but that's what they're expecting. Let's look at net income. So they're expecting them to still be, So they're expecting, this is the bullshit surrounding Wall Street, right? So they're expecting them to be profitable from the high net income side for the first time in the company's history. They're expecting them to be profitable in 2025. So net income high for $251 million. $251 million is a lot of money, right? So they're expecting them to be profitable in 2025. And then obviously $1 billion, more than $1 billion of net income profitability by 2029. Now, from an average perspective, let's see. Again, they expect them to be profitable in 2025. Let's go ahead from the low side. Again, they expect them to be profitable in 2025. You see, that is impressive, right? That is impressive. And interestingly, let's see the number of analysts. So and again, they can't lie. There are about 23 analysts covering Grab. And about, around 10 to more covering the EPS. So this is incredible, okay? They're expecting to make around, yes, that is incredible. The fact that they're going to be net income positive. So essentially, what does that tell you is they're about to get the three-headed dragon. What is the three-headed dragon? Operating cash flow positive for the first one, which they already got. Free cash flow positive for the second one, which they already got last year. And then this year, 2025, they're expecting them to be net income profitable. So if they can still maintain OCF, FCF, and net income profitability, then they have the three-headed dragon, which means you're going to be one rich mofo. Okay. So now that we know that, and we've pretty much done the analysis, let's go ahead now and do a Monte Carlo. So we'll run 25,000 AI engine simulations utilizing our advanced stock terminal. And we'll go down here and we'll see. On the minute, bull case $4.81. On the hour, $5.77. On the daily, 666. Ooh, that's a dangerous number. Weekly, 6. All-time 6. Which makes sense because ultimately it's been on a downward trajectory for a while. Now let's go advanced technical analysis for all, and let's see what the scoring system is. 3-2. In fact, I just remembered something. Let's do institutional. Let me go back. Hold on. Give me a moment. Let me go back to the minute. Let's go back to institutional. Let's score it. So right now they're bullish 3, bearish 6, which makes sense because we're still waiting for Q1, so it's skewing the data. So let's do this and score it. Okay, so we're still waiting for Q2, but you could see that is all bullish. So incredibly bullish. Okay, so we got that. And then now let's do a couple things here. So now that we have this, let's look up our enhanced AI analysis. You could see, revenues 18% increasing, gross margins. Look at gross margins, 41%, kicking Uber's ass. Shares, slight 2.58 increase, book value. You got a decrease. Operating cash flow went up 890%. Free cash flow went up 13,000%. Sign flip. Incredible. So this is specifically for the Stock Trades Lifetime Access Premium Terminal. You have to access it using our website, which is at alstocktrades.com. And it's only available for the mastering and bundle users. So now let's go ahead and click on the Generate Insights button. And now it's going to conglomerate over 3,000 pages of SEC filings, probably less for this company. And then it's going to synthesize strategic financial intelligence. And what's going to end up happening is it's going to take all that information and we're going to go ahead and utilize our AI and see what patterns it can see that I did not. And again, as you can see, This channel, we don't, again, it's alive. We don't have the fancy bells and whistles. I don't care about the channel looking good. I just care about data. I'm data driven. I follow the data. I don't follow hype. Okay. Other channels that like to go ahead and fluff things up, right? I'm not trying to fluff you. I'm trying to show you how the big boys do an analysis. I've been doing this for 14 years. Soon it's going to be 15, which sucks because I got gray hair now, even on my goddamn beard. But it is what it is. But the goal of life is to show a skill that you've learned, and I'm showing you how this works. And you can see the AI typing right now. Let me zoom in a little bit so we can read it. Right? It's a very powerful AI. And it uses the most advanced models. It does not hallucinate in its closed loop that utilizes our proprietary All Stock Trades terminal. Okay. So let's read what's going on here. So revenue growth strong, but deaccelerating. I get that, but it's still growing. Revenue has grown significantly. Okay, good. Negative growth is slowing, 18.6% compared to 64%, 64.5% in 2023. I get that. Q1 saw, okay, I see that. That's a red flag. Again, you see how it's able to basically give you red flags to look for? So gross margins turned positive in 2022. That's incredible. And it reached 42% in 2024. You see how it's able to do all that for you, reflecting better cost control and scale. Operating margins improved from negative 276. That's incredible. Losses narrowed. Good. Net profit, so signaling potential break even ahead. Good. Path to profitability is clear, but sustained cost discipline is critical. Positive EPS could trigger a re-rating for the stock, which we already know about. Operating cash flow, and we know, and you see how so the numbers are telling us this, the analysts are telling us otherwise, and the pattern is telling us that they are going to flip. You see how you have to use a lot of this data? It's like onions, right? It's like a puzzle, right? And we haven't even looked at the earnings transcript and have our AI artificial intelligent model activate the earnings transcripts and have it basically parcelate and read to it. We're going to get there. Again, one puzzle at a time, right? So let me go ahead and just zoom in a little bit here because I want to make sure you guys see it because you might be on your cell phones, right? And some of you guys are in their 50s and 60s and you need glasses, right? I will need glasses sometime in the future as well. So I'm not making fun of you. It is what it is, right? Take your vitamin A. So implications. Okay, good. Cash flow. Okay, good. We talked about that. Free cash flow improved. Negative 893 to positive 775. Yeah, that's one thing I do want to touch on. Look at free cash flow, guys. Went from negative 6 million to $775 million. That is crazy. That is insane. That is a free cash flow generating machine. That is a freaking free cash flow generating machine. Holy mother freaking God. I want this to see this. I want this replicated. Now let's see how much of revenue goes to free cash flow. 27%. This thing is a behemoth. Jesus Christ. Holy shoot. Look at that jump. Look at this just jump. Oh my God. Insane. It is insane. I want to see that replicatable. That is insane type of free cash flow growth. That is insane. That is like, holy crap. All right. Strong FCF. Again, we haven't even calculated the price target yet because we're gonna go ahead and calculate what the stock is worth. I haven't even done that yet. Again, I'm just trying to collect onions right now. I'm trying to like peel the layer. Okay. We have strong FCF generation. Yeah, strong is an understatement. More like Thanos, right? Level of free cash flow. So yeah, reduces reliance on external funding. I doubt there's not going to be a share dilution. I doubt that, right? Book value stabilization. Again, this looks like a tech company, so I don't really care about books. Valuation hinges on future profitability. No crap, right? Mr. AI obvious. Share dilution grew 3.7 in 2029 to 4. Diluting equity, understandable. CapEx remains modest but inconsistent with a spike in Q4 and in Q3. So that's interesting. So let's zoom out here and let's look. So what did it say? Q4, right? Let's look at CapEx. It said there was a spike in Q4. See, that's right, Q3. So there's a little spike there. So what were they spending on? Again, it's insignificant because they're a free cash flow generating machine. Okay, let's go back. What else? So bull case, if Grab sustains revenue growth greater than 15%, if they can maintain that, achieves consistent profitability, the stock could re-rate sharply. No crap. No crap. Bear case, slow growing. Obviously, if the growth goes down, cash burn goes up. Of course, right? Final verdict, cautious optimism. Okay, this is my favorite right here. Let's read because this kind of summarizes everything. So Grab has made Grab me by the love handles, right? Grab has made remarkable progress towards profitability and cash flow positivity. However, decelerating growth and earnings volatility warrant caution. Investors should monitor quarterly profitability, consistent positive EPS, revenue acceleration, FCF sustainability, because again, that 700 is a lot. I want to make sure if that's sustainable. So obviously Q1 is going to be a big one for this one, right? Of 2025, right? If they already didn't have it, I got to see. Recommendations, either recommendations for the company you want to basically look at, right? That's good. So altogether, I like what I see. So now let's go ahead and let's look at Grab and let's do a couple of analysis. So we can look at, let's see, do they report no earnings for Q1? Now, again, this is our stock trades earnings terminal transcripts. So I know they've done Q4. So let's click Q4. This is their earnings. You can click on it and the AI, ladies and gentlemen, you can increase the speed. Joining us today. My name is Faith, and I will be your conference operator for this session. So Faith, you can have the computer read to you, but our stock trades terminal, it's almost like it tunes into every earnings call in the nation, and it's able to convert what they say into transcripts, right? So it's almost like you have your personal assistant. What I'm going to do is I'm going to do two things. I'm going to hit generate insights for the past 3 years, but before I do that, I'm going to go ahead and use our AI model to generate insights specifically for this quarter only. So now it's going to go ahead. We're going to zoom in. It's going to say synthesizing strategic transcripts intelligence for the past quarter, just this quarter here, okay? And we're going to go ahead and we're going to read what it says. Again, this is the power of our stock terminal, right? And if you want access, it's just a one-time payment. Use the SAS coupon code to get over $1,000 off, $1,200 off, right? And you can use Affirm and everything. We our platform, it's really reliable. And again, this is what you get, right? So it's pretty. You get all this other stuff here, right? So it's pretty impressive. So now let's go ahead and figure out this. Let's see here. There it is. I don't have energy to do another SPAC. Honestly, sees what you can do is just watch it. Just, you don't have to, again, this is an educational platform, right? If you don't agree, and again, there are some risks with investing in Asia with Trump and everything, but I'll tell you, just use this as an educational lesson. Go ahead, see the company, do its intrinsic value. We're going to do the intrinsic value now. We're going to calculate the intrinsic value, right? And then ultimately watch it for the next 4 or 5 years and then see if the stock goes down or up and then use that, as education. And then later on, there are probably going to be opportunities of the future. There always are, right? And then you just take it as a learning lesson. That's all it is. I mean, that's what I did, right? So that's all it is, right? But this is a great time, honestly. But we'll see. I don't know. I need to calculate the value. So first, let's read this, and then we'll go from there. So again, we're just kind of waiting through here. So 2025 guidance, they're saying 19 to 22%. So they're expecting an increase in revenue growth. Impressive. Adjusted EBITDA. So they're not saying they're going to be net income positive, which is interesting. So perhaps maybe they might not be profitable. Maybe they are. Again, I don't know. Maybe they're under delivering. Perhaps maybe the tariffs are affecting profitability. I don't know. Overall rating, buy for growth-oriented investors with a 12 to 18-month horizon. You see how incredible that is? There's AI leadership here. So let's just kind of see what's going on here. You can read all this. strong financials, 20% more. So here it is. Grab delivered a strong performance in Q4, achieving record on-demand GMV growth, profitability, and positive free cash flow. The company demonstrates robust execution and yeah, good. So what we can do right now is let's just generate insights for the past 3 years, right? And then we'll exit this and I'll just put this on the corner here and I'll just have that load. And as that loads, let's go ahead and do the intrinsic value real quick as that loads. I'm really curious. So let's put grab. Again, I don't want to look at the cash. So we got 77. Oh, that's this is crazy, guys. No way. I don't believe it. Hold on. I just don't know, guys. The free cash flow just seems a little too crazy because I just can't believe that it's $700 million of free cash flow. That has to be a one-time effect. That just can't be. So if you put 56% growth, they're not growing that. So let's do 17% for now. We do that with 77 million of free cash flow. You get pennies. They're not pennies. They grew. They have cash flow. What is the cash flow? Let's see what the terminal says. Let's go back to annual. 775. You go to 7, you put here 775. You update that with 17%. Bull case is $7.43. Base case is $5.26. And a bear case of $3.98. So interestingly, 526. Let's go to the stock price here. 526. Yeah, so it went near, right? Yeah, so it pretty much went near its base case. Okay, so the AI now is typing. Let it type now for all the earnings transcripts. I'm watching it here. Right, so let that work. But here's the thing. That's 17% growth rate with 775. So bull case is $7.43. They did say they're going to grow around 19 to 22%. So we could say 19 plus 22 is 41 divided by 2. That's about 20.5. So we could put 20.5 here. So what's the max that you could see this? So you could see a bull case of $9.57, a base case of $6.70, and a bear case of 5. So 670. So what was the 52-week high? Yeah, so about 572. So again, I would say 20% is okay, but we should be a little humble. We should be a little humble. And yeah, let's be a little humble. Let me think. Let's go back to analyst estimates. Okay. And let's look at the revenue. So in 2029, analysts are thinking 5731. So yeah, let me go here. Right. And let me open up progression analysis. Okay, let's open up this. I want to calculate the CAGR here. So let's calculate the CAGR. So they're expecting, what was it? 5731. 5731 in the 2029, and then in 2024, how much do they make in 2024? They made 2797. So that's about 15.43%. Okay, so maybe as we get a year out, it gets a little bit more difficult. So let's do 2026. I think that's fair. 22, because again, let's do this one. 4713. 4,713. But this time, what year was that? 2026? Because they decreased the slope for some reason. I don't know why. Let's just keep it as is, 2026. Okay, and let's see what the growth rate is going to be. Interesting. 29.81%. Interesting. Mm. That is a bit high, don't you think? Let me think. We can take the average. So we'll take the average. 3929. 18.52%. So let's now take this data and let's see. If it does grow 29%, we can expect Grab to be $17.51. Base case $11, bear case 8. I would say, to be humble, I would say 19%. I think that's good. Yeah. So again, you can make an 83% return on this. Again, I was a bit excited given that they were free cash flow positive. 775. Now, could they trade 2-3 years out from free cash flow? They could, which means that if they were to grow 2-3 years in advance, then I would say it could be like Palantir, because Palantir is worth around. I gotta do the analysis. But for Palantir, what's the free cash flow? 1141. Yeah, you see, Palantir is around $40. Now, if you do 30% growth for Palantir, $48. So they're trading like, they're trading 3 years ahead of the market, right? So we can calculate it right now. Let's say 2 billion, 3 billion of free cash flow. So about 28 billion of free cash flow. Sorry, 2.8 billion of free cash flow. So I would say you take 28, well, hello, 2,800 divided by 1141. That's about 2.45, the free cash flow. Okay, so let's go back to Grab. So potentially, if we were humble, we say 19, 2.45. So we could take the free cash flow of 775 and times 2.45. We could say that, well, if this is a free cash flow generating machine 1898, then potentially 1898, it could trade up to $21. So $11 to $21, which is about a 3-bagger. So you could see prices go anywhere between $8 to $20. But here's the problem. The problem is now you're putting in almost 2 to 3 years of free cash flow generation ahead. But which is what Palantir is doing now. So when someone buys Palantir, which we need to make the video, but when someone buys Palantir, right? When someone buys that, they're buying. They're saying that I'm willing to buy Palantir 3 years ahead of what the current financials are at. Now, does Grab look like it can do that? Potentially, because they were free cash flow negative, but these institutions weren't backing down because, well, just look. Ownership percent, yeah, it dropped down, but it was still 51. It was still 52%. You know what I mean? Now it's back up to 70%. So I don't know, guys. So I would say that maybe it might just. No. Yep, I already confirmed. This isn't USD. This isn't USD. I already confirmed that. But you are correct. when looking at other companies, you have to make sure. So I did double check. Let me double check just one extra more time, because I'm anal and better be safe than sorry. But if based off of this, you expect us to be even more bearish, right? But let me so the beautiful part about them is they report in USD, which is different. I mean, they're not from China specifically, so they do report in USD. So yes, this is in USD. I just quadruple checked. Again, you got to be careful. Rabdo brings a good point, because you got to be careful here, right? Again, it's better to be safe and check than be an idiot, right? Than to think you're actually doing some analysis, right? When you haven't even converted, But good point. All right, so yes, it is in USD, but so I'm again, I think that this thing could go to $21, but again, I think that's bullshit, because we're talking 5 years from now. I don't think so. I would say, if it's a spade, call it a freaking spade, right? As of right now, it's 775. Okay. 775. There it is. So again, it can grow to 15%. And if it does, then I'll be a little worried. That means the bull case is $6.42, base is $4.59, and bear is $3.50. So you're only looking for a maybe 37% upside return. So they got to stay above 15%, 19, 20. If they can go to 25%, then holy shit. But I would say 19% is a pretty good. That's the lower estimate of their guidance. So I'd say, $8.58, bull case, base case $6, bear case $4.54. Again, you could double your money here. You could potentially double or triple if the market allows it to buy it 2-3 free cash flows ahead. But again, this is Palantir. Palantir is an American company integrated within the Central Intelligence Agency, the NSA, the military. So obviously it commands a 2 to 3% increase, and it has a level 5, level 6 optimization clearance within the United States government. Grab does not have this type of agreement. So I don't think that we are going to go 2-3 years ahead of revenue. So I think personally, this is fairly priced. You might ask yourself and say, Al, I don't believe this. This is a $3-4 stock, and you're telling me 775 million free cash flow only gives you this much? Well, because there are 3.9 billion shares. And also you have to understand this was a SPAC. And a lot of these people that bought this SPAC bought it at an evaluation because they knew how much it was worth. Because guess what? They did their own intrinsic value calculation. That's why, it's worth 19 billion already. It's a $19 billion market cap. Now, if Clover was 19 billion, that would be a $38 stock price. You understand what I'm saying? Look at Clover's market cap, and Clover's an American company. 1.77 billion versus Grab is 19 billion. Again, yes, this is undervalued. Yes, you can make money. Is there uncertainty? Yes, it was priced heavily. It was when the stock went down to three something. It went down here to 348, right? So, and here, let me show you something cool. This is our AI. It was doing the analysis, and look at Q1 2025 GMV resilience post Ramadan. It even is analyzing the religious schedule because there's a lot of Muslims in the area, and it's even analyzing the trends of how the religion affects the business. I mean, this AI is so incredible. Only folks that are lifetime members can have access to it. It's an add-on. For folks that are interested in our analysis, coupon code is SAS. As you can see, based off of this analysis, you can ultimately see that it's pretty incredible, right? You can see how we went from being incredibly bullish to now saying, yeah, we can double our money, but I think there are other opportunities out there. So it's up to the people. Again, I don't want to skew people on this. This is just, you be the decider of this, Mr. Turn It Up Tony, right? Um, but I presented it to you here. We got some let's see here, positive free cash flow, 136 free cash flow, and 370 improvement year over year, and all these other things that you could go ahead and read here. But it's pretty good. Just pause the video and you can read it here. But accumulate for long-term ecosystem upside. Definitely strong buy, right, from this avenue. But again, big thing here, guys, is intrinsic wise, I think the free cash flow is pretty met there. In fact, let's just do this one. I'm just curious. Oops, wrong company. That's 39%. Let's override and let's say 19%. That's the thing. I get scared when I do these types of companies. So, if I'm curious, what is Uber? Uber is 4. Let me give you another evaluation. There's many ways to do this. 43 billion. Uber is 43 billion. But again, Uber is an American company. So 163 divided by was it again? 43. Let's call it 44. Let's say it can get 75% of that. 2.77. Okay. Let's go grab. Let's go 19. So potentially, again, you could see 13, 8 to 13%. If it's anything like Uber, you could see go up to 20, right? And again, $20 divided by $4 and whatever cents now multiplied by 19 billion. That's about an $88 billion market cap, right? So again, there could be a opportunity here, but I personally, for me, I'm going to pass on this one. I'm not saying, I'm not saying that you're not going to make money on this. I just think with all the, again, be fearful when others are greedy, but I'm just thinking like, yeah, I can probably 2-3x my money, 2-3-4x my money in the next 10 years with this if it does continue to grow. But I'm just you saw my analysis, right? I mean, I just don't, you got 72%. Let me look. Let's look at Palantir. And again, we're comparing apples and cockroaches here, so we're not even doing a good comparison. But let me just see this. Let me look at the ownership percent. So ownership percent, you see, 50% ownership, and we're at $100 stock price. All right. I mean, institutions own about 70%. So I doubt that the stock price is going to be bought at a higher share value. I think at this point for institutions, this is the buy and hold for 10 years, 15 years. So if you're willing to wait 10 years, you will see $20, $30, $40, $50 stock price potentially. So what I'm going to do is I think once, just like how Palantir hit my price target, just doing cover calls, cash secured puts, and on my other account, pretty much going to wait until my other stocks hit intrinsic value, and maybe if this opportunity still exists, I may put in maybe 10%, 5-10% of my net worth But yeah, but again, you see how we went from really bullish to saying, oh, okay, this thing's worth anywhere between $7-8. Okay, whatever. You know what I mean? And the reason why it didn't jump that much is because institutions hold around 70% now, so they're accurately pricing it. So anyway, that's all I have for you guys. I hope this was helpful. You know, please give us a like. We'll see how things develop. If they grow more than the free cash flow than what I had outlined, then of course the stock price will go up. If the revenue goes up, then of course the intrinsic value goes up in terms of the growth, and that's ultimately it. So we are going to hit profitability based off of the analyst in 2025 and 2026. So we'll go from there. Hope you enjoyed the video, guys. For folks that are interested in signing up, so you can calculate the intrinsic value of the stocks that you hold. So potentially you realize that you're not holding a thing that'll drain your account or something that will destroy your finances. This is the GPS that you need, right? God bless you guys, and I'll see you on the next one.